Welcome. My name is Van Richards. I'm a chartered financial consultant, and I come to you on a daily basis, mostly every day, to teach you a little bit about how to pick stocks, teach you the characteristics to investigate, to understand what you need to do to find stocks that's going to fit your financial preferences and your financial goals. And the stock that I'm going to talk to you today about is Bank of New York Mellon Corporation. I think you're going to enjoy learning about this. So let's go ahead and begin talking about this company. But before we do, the first thing that I want to do is I want to thank our sponsor. Our sponsor is richardsfinancialplanning.com. If you are frustrated with your finances and you'd like some help in going in the right direction, go over to Richards Financial Planning and learn about the prosperous planning process. Okay, so let's go ahead and start talking just a little bit about Bank of New York Mellon Corporation. Now, this is interesting. If you have a $10 bill, pull it out, U.S. currency, a $10 bill, look at the picture on it. The person on the front of it is Andrew Hamilton. And Andrew Hamilton is actually the person that began New York Bank Mellon. It's kind of interesting. So let's talk a little bit more about how the structure of that company is designed. It's been around for over 200 years, but we want to learn a little bit about how it works today so that you can determine whether it's going to be a good stock to fit into your portfolio. The company in itself has 7 lines of financial services. They have securities services, capital market infrastructure, wealth technology. They also have asset servicing. And then the 5th aspect is the issuer services, treasury services, clearance and collateral management. Then the 6th aspect of the company is Pershing. Pershing is a clearing firm for broker-dealers and registered investment advisors, much like myself. And then also the company has its own investment management and wealth division too. The interesting thing about this company is it oversees $41 trillion in assets. They are the world's largest financial custodian. Now, Bank of New York Mellon is worth around $36 billion, $36 billion in total assets from the company in itself. I'm going to pardon myself just a little bit because I seem to be having a little technical difficulty, as we do sometimes when we do live broadcast. And there we go. That's much better for me. All right. The stock itself closed down the day about 2.85% at $42.23. Now, remember, with all the stocks that I help you with, I help you to understand, I look at 3 different things. I look at the stability of the stock, the earnings, and the competitiveness of the stock in itself. And when I begin looking at a company like the Bank of New York Mellon Corporation, the first thing that I want to identify is the moat. Remember, I've talked to you about this on many days. The moat is that characteristic that sets this company apart from its competitors. And I think really that it's pretty clear that New York Bank Mellon has a wide moat. And there's 3 characteristics that I center in there. Number 1 is going to be the cost advantages that they make available to their customers. They're able to do things cheaper because they're so large. The third part, the size advantage, is really linked into the cost advantage. The other part is the switching cost, which is a significant moat characteristic. When you have a company that's dealing with securities, let's say, for example, if you have a company that's dealing with Pershing, their back office for broker dealers. If a company switches from Pershing to Fidelity or another company, that's a big change, and that switching cost is significant. So those wide moat characteristics are making it very sticky to stay with the company in itself. So let's look at the earnings right now for New York Bank Mellon and see how they've done over the past years. In 2020, we got to the end of the year. They had earnings of about $15.8 billion. That's down somewhat from 2019, which was at about $16.4 billion, off in total really about 3.97%. But when we dig into the numbers just a little bit more and we look at it on a quarter by quarter basis, and we look at the fourth quarter of 2020 compared to the fourth quarter of 2019, that's pre-pandemic, 2020's revenues were at about 3.8 million as compared to the 2019 revenues, which were at 3.7 billion. I think I said billion there a minute ago, 3.8 billion compared to 4.7 billion in 2019. That's off quite a bit. That's off about 19.57%. So let's look at what kind of trend went on in 2020. Now, we're coming out of the pandemic, we hope, but if we go back to the first quarter, right when the pandemic was starting, the first quarter of 2020, they had revenues of around 4.1 billion. They then quarter two was 4 billion. We see the effects of the pandemic more in the third quarter at 3.8 billion, and then we saw it increase back up in the fourth quarter to 4.7 billion. We're hoping that with this company, as with a lot of financial services, that things are going to be getting better as things become more stable. Now, what I tried to do is look really at the different lines of business that the company has. They have really 7 identifiable lines of business, but there are 2 of them that are significant, and I want to talk to you just a little bit about how the economy will affect those different lines of business. The first one, if you're looking at the screen, you look at the top of the screen, it says net interest revenue. Now, only about 20% of the revenues for the company come from interest. That's going to be different types of bond securities. Usually it's going to be government related, but regardless if it's bond related securities, there's going to be income that's associated with that. As income from bonds has trended down with interest rates that have trended down, those revenues decrease. Now, one benefit that you'll see later when we talk about a bullish aspect of Bank of New York Mellon is that only about 20% of their revenues comes from net interest income bearing securities. Now that's trended down, and I think that we're going to see more of a trend up with interest rates. I'm not sure what you think, but I think that as we go forward, we're probably going to see interest rates trending back up, and that will be a profit center that will trend back up with the economy in itself. Now, when we look at the bulk of the income that is at Bank of New York Mellon, about 80% of their revenues are fee-based. And if you're looking at the graph at the very bottom of the graph, you'll see how I've charted that, and there's not very much movement. There's a little bit, but there's not a lot in comparison to the net interest revenue, which has trended down as interest rates have trended down too. Now, when we look at what that's actually done to earnings per share, it's down. When we look at the 2019 diluted earnings per share, it was $4.51 in comparison to the 2020 diluted earnings per share at $3.83. That's off about 15%. How does that look in comparison to past years? Because remember, when we look at the SEC model that I suggest that you look at with stocks, when we go through the S, that's the stability, then we're looking at the earnings. So how do the earnings right now, even though they're off, compare to past years? Going back all the way to 2014, we can see that they've actually trended up over the years. And it's a gradual, if you're looking at the graph, it's a gradual increase, and it's kind of leveled off over the past year. And that's a good thing from that standpoint. But we have to understand that the past performance of any of these numbers is not going to be a guarantee of what the future may hold. Now, I wanted to compare this company to other companies that are similar to it. So what I did is I went back a year ago and looked at the KBW Bank Index, which Bank of New York Mellon Corporation is inside of that index. And it's pretty close to it. It's stair-stepped. The index started a year ago at 107.39. Bank of New York Mellon started at $44.44 on the 4th of February in 2020. When we go forward and we look at it, what it ended today, it was 42.23. I know on the screen, if you're looking at it, it says 42.17. I did these about noontime, so they're off just a little bit. In general, though, the stock is off a total of about 5% for the year. That's not including dividends that we're going to talk about in just a little bit. And that's fairly close to what the index is. But I want you to understand that this index also includes a lot of more customer related banks, which are going to be like Wells Fargo and Bank of America, and they have a different model as far as profitability goes than a company like Bank of New York Mellon. Bank of New York Mellon is going to be more like a company like State Street or Northern Trust. They're going to have more custody that's going to be associated with them. And again, I have to remind you that the past performance is not going to be a guarantee of what the future results are. So let's get in the Wayback Machine and let's see what happened 3 years ago. 3 years ago, we go back to 2018. I know that if you're looking on the screen, it says that BK's number or Bank of New York is only 2020. This should say 2018. In 2018, the price was around $50.19. And then when it ended today, around $42.23 or $42.17, it's off a total of about 15 to 16% over that 3-year time period. It is less than what the KBW Bank Index was for that time period. The KBW Bank Index ended the 3-year time period only down negative 4.32%. It lost about 1.5% per year. The biggest difference that we've seen occur, if you're looking at the graph, the spaghetti graph, the biggest disparity came within the last 3 to 4 months. But I think that that's due to a lot of the way that the company is structured. Okay, if we keep going forward, let's talk a little bit about what the outlook is for the company. Now, Bank of New York Mellon has said that they expect their fees to grow at about 1.5%. That's the revenue from their fees through 2021. And how does that translate into market performance? Analysts are estimating, and when I say analyst, that's going to be an analyst like Morningstar. Analysts estimate that a 10% change in markets result in about a 1 to 1.5% change in revenue. So there's a lot of expectation that is put on what the market may hold for the next year. If we connect the dots in there, I think that Bank of New York Mellon would be expecting to see about a 10% return in the markets over the period of the year. If it's more, then their fee revenue is going to be higher. If it's less, their fee revenue is going to be less from that point of view. So that kind of gives you a little bit of idea, but I want you to remember that the idea of fees and growth and outlook is just an outlook, and it's an opinion from the company. It's obviously not going to be a guarantee. Okay, looking a little bit further at what the dividends are, because this is one of the biggest reasons why people pick this stock, is because it has a fairly steady and consistent dividend, and the dividend is high in respect to what other income producing securities are in the economy. Their dividend right now is at about 3.02%. But remember, the past performance of dividends is not a guarantee of what can happen in the future. So this is a good point for me to stop just for a second and take a breath and say thank you to our second sponsor, which is adviceforlifeinsurance.com. Your family needs you. Protect them with life insurance. You can find the best life insurance at the lowest price in less than 5 minutes at adviceforlifeinsurance.com. That's a great segue into talking about the bullish and the bearish aspects of Bank of New York Mellon. This is what the analysts out there are saying about this company. And the first thing is the Bank of New York Mellon is more diversified than most of its competitors, even State Street Bank and Northern Trust. Even though those companies are similar as far as being custody companies, they're custodians for assets, much the way that Bank of New York Mellon is. They have some aspects of the company that is Bank of New York Mellon has some aspects of its company that set it apart. So it's not going to move in lockstep and along with correlations with State Street Bank and Northern Trust. The second thing is only about 20% of Bank of New York Mellon's revenues come from net interest income. I talked about this in the very beginning, and that's a bullish characteristic of this company because it sets it apart. If interest rates do trend up, then it's going to favor the company. But if interest rates and credit tends to wane, then it's not going to hurt the company in itself as much as some of its competitors like a Bank of New York or Wells Fargo. The third thing is that Bank of New York Mellon's non-custody lines are unique and they do perform well. You know, when I said that only 20% of those revenues come from interest-bearing securities, well, they have some other parts of their company that are unique. They have an ADR servicing part. ADR is American Depository Receipts. This is foreign companies that are listing their companies on New York exchanges. They have a mutual fund sub-account management agreement with a lot of companies, and that's doing very well. They also have a thing that's called their TriParty Repo Clearance Division, and they're the only ones that do this. I'm going to explain that in just a minute. The other thing is that their treasury services are unique because they are so significant to the economy. Just as a short education part, the TriParty Repo division is this. A repo is this. A repurchase agreement is a form of a short-term borrowing for dealers of government securities. So it may be an overnight loan, and that difference in price is usually going to be the fee that the company that's lending that security out makes as a profit. So you'll have cash investors that want those government securities just for a very short-term basis, and you're going to have a dealer of the securities on the other side. Then you're going to have a middleman, which is the clearing bank, and that's what Bank of New York Mellon does. They have a division that specializes, and they're the only one that does that. So that does set it apart, and it makes it significantly beneficial to the company. It is a bullish aspect of the company. Now, not all companies are perfect. We all know that. And the bearish aspects of the company begin with this. The trend in asset management is for lower fees. I think if you look at your retirement account, you look at your mutual funds or anything like that, the trend in fees is lower. And when that happens to a company like Bank of New York Mellon, it results in lower revenues for the entire company. The other thing is that if you're looking at this as an investment toward the future, there are three characteristics in the economy which are going to significantly affect the future of Bank of New York Mellon. The equity markets, as I mentioned previously, if the equity markets advance 10%, then they're looking for a 1 to 1.5% increase in revenues. What happens if the markets don't go up? That could be a bearish characteristic. The second part is the interest rates. If interest rates trend better, then we'll see that 20% part of the company trend better too. But if it doesn't, it's going to wane behind. Also, foreign exchanges are very unpredictable. A moment ago, when I mentioned the idea that they had an ADR servicing division, if the foreign exchange, if the value of the dollar is down, then it will hurt the overall profitability of this company from a domestic standpoint. And then the third thing is, and this is something that it's questionable. I looked it up on LinkedIn and I'm not sure I agree with it 100%, but this is what some bearish analysts are saying. They're saying that the management turnover at Bank of New York Mellon is higher than its peers, and it can affect the company going forward. Now, when I come to this part, I talk a little bit about what Morningstar gives as far as a star rating. And I want you to understand that the star rating is more of a valuation prediction than anything else. When we look at this company, Morningstar has given it 4 stars. Now, a lot of times you might think of, hey, a 4-star or a 5-star, that's a great characteristic. Well, that's questionable. And the reason is it's all tending to trend toward value. If the value is going down, then you're going to see the star rating go up. Now, is that a good thing? I did, if you watched my review on The Macerich Company. When I did it, the Macerich Company was listed as a 4-star. Well, today, because the value's down, it bumped up to a 5-star. Does that mean that the quality of the company has increased? No, it doesn't. The financial situation really hasn't increased. It's just basically that the value, the market value of the company has decreased below a threshold. Now, what they're saying the valuation is on Bank of New York Mellon, it's at 48%. And this is really a good point to talk about why I use Morningstar for a lot of the information that I bring to you. I had one of my listeners that's out there, Mango Juice, which is in the Netherlands. I love some of your names. Mango Juice says, "Hi there from the Netherlands. I appreciate the time you take in making these videos. I had a question about Morningstar. How come they're a good reference? How come they're a good reference to use when determining the worth? I'm curious about the reliability and what made you choose them as a way to determine worth." Well, Mango Juice and everybody else that's out there that's wondering about what this company does, that is Morningstar, as far as ratings go, one of the reasons why that I picked that is because of their valuation process. They have a lot of analysts that they put out there that are doing research on individual stocks. One person like myself couldn't do everything that Morningstar does, or any analyst company. So if I'm going to bring information to you, I have to depend upon companies that their job is doing analyst research. Now, when the valuation for Bank of New York Mellon was selected by Morningstar, this is how they did it. And I'm going to read to you the quote that came from their valuation review. They said that the fair value estimate equates to approximately 1.0 times the book value, 1.9 times tangible book value, and approximately 12 times our 2021 GAAP EPS. Now, GAAP is generally accepted accounting principles, and EPS is earnings per share. They put a lot of emphasis on the fundamental aspect of a company when they're picking their fair market values. And when I say fundamentals, there's a difference I don't want to get too geeky on you, but there is a difference between the fundamental analysis and the technical analysis. Technical analysis is looking more at bar charts and trends and that type of thing. Fundamental analysis is going to be actually looking at the profits and losses of the company, the valuations, the earnings. That's going to be more of the fundamental aspects. And when you look at how Morningstar picks that fair market valuation, they're using a lot of fundamental statistics when they do that. And that is the reason why that I use them. I think they do a great job. You can go over to their website and you can actually see how they do that if you want to subscribe to their service the way that I do. Okay, let's look at what some of the other analysts are saying about Bank of New York Mellon Corporation. In looking at the number of analysts that are offering opinions on this company in the last 90 days, there are 13 analysts that have released a report. Out of those 13 analysts, 5 of them are saying that Bank of New York Mellon is a strong buy, and 7 of them are saying we're going to hold on this. One said that they put a moderate sell on it. So when you average that out, it comes out to that this company is really considered a moderate buy. How does it compete, though, with its peers? And the way that we do that is look at who their peers are. Now, a company like Bank of New York Mellon is going to be different, as I've mentioned previously in the broadcast today. It's different than a company like Bank of America or Wells Fargo. They're not as face-to-face customer related. They're going to be more like a JP Morgan, Northern Trust, or State Street. Now, if you're looking at the spaghetti graph that I've thrown up on the screen, you'll see that Bank of New York Mellon is in blue, and it's trended about the same as the other 3 peers that I've compared it to. It ended the 12-month time period that I charted below everything else. So you have to ask yourself this question: when you see a company that has trended below its peers, is it at a point that it's a buy because it's lower and more profitable going toward the future, or is there a problem going on? I'm going to leave that question up to you and just continue going on and look a little bit more methodically at what some of the analysts are actually saying about this company. Now, it's interesting. You're talking about an analyst that's rating a company that does analysis. So you can take it with a grain of salt if you want to. I think they're probably pretty fair in their opinions of what they think that the value of the company would be. Now, remember that Bank of New York Mellon today ended at 42.23. And what the most conservative view on this comes actually from Bank of America. They're in the same type of business, just a little bit different. They're saying that their opinion is in between $39 and $42. That's what they're looking for as a target price. And they're looking for the company to underperform. Well, I would have to ask myself the question, is that a fair rating? When we go to a company like Barclays, they're giving an overweight recommendation on this. And when I say overweight, they're putting more emphasis on it. And they're picking a price which is actually pretty high. It's in between $54 and $59. And as far as timing goes, the estimates from Barclays came out at the beginning of January, and the opinion from Bank of America is actually from November of 2020. So there's a little bit of a difference in there. The most recent opinion from an analyst comes from Morgan Stanley, and that was on January 21st, and they're looking at a target price of between $50 and $51. If that's the case, we still have about 10% to go before we get to that, so that's going to be good going forward. So hopefully this gives you a little bit more information on how this company fits into perhaps your portfolio going forward. It is one that I believe is a stable company based on the fact that it has a fee basis for its revenues. Its earnings, we went back all the way to 2014 and looked at the earnings history, and they are trending up slightly. And they are competitive, although in the past year they have fell below their competitors in value. So you have to ask yourself the question, is the glass half empty or is the glass half full? Well, that brings us to the very end of today. I'd like to thank you for listening. If you have a stock that you would like me to take a look at, write in and let me know. I love reading your opinions and your questions, and I try to answer them when I can. Remember that when you're asking me specific questions, I can't give you direct advice over the internet. I can just give you a general information as I do here today. I'm only able to give direct advice to my clients. And if you want to be one of them, go over to richardsfinancialplanning.com and learn more about what I do. Okay. Also, there are limits to the information that I'm able to supply to you. So stick around just for a moment and listen to the disclosure. If you're listening to this on the podcast and if you're watching it on YouTube, you just continue to watch and it'll come up on the screen for you. So thanks a lot, friends, for listening to you. Have a great evening, and we'll talk to you on another day.